Hi, Phil. Today we're diving into the competitive landscape between European and US investment banks and the $150 billion of global trading revenue. European investment banks are struggling to compete against larger US peers. Why is that?
Yeah, well, there's a number of reasons behind it. First of all, it's scale, the size of the banks, how much they're operating in the business, there's regulation, there's the consumer setup. And the issue's been what we've done is we looked at all the major large banks over every quarter for the last 8 or so years, how their trading revenues are trended. And what we've basically seen is the European bank share of that has shrunk from about 40% back in 2017 down to about 30% today. So quite a material loss of those bank shares for the European banks.
Thanks. So, can you please now touch base on which European investment banks have managed to gain ground in terms of global trading revenue shares, and what strategies have they employed to achieve that?
Yeah, there has been quite a divergence between the banks. So Barclays has been one bank which has managed to grow share over that period. BNP as well. Also, Deutsche Bank was losing share up to about 2020, but since then has been gradually increasing it. However, if you look at all the other banks, particularly across the region, Credit Suisse, of course, also UBS, Crédit Agricole, Soc Gen, those banks have been losing share. And what we've seen is some of the issues are when the banks are trying to offer all the platform, all the operation, different types of business, investment banking opportunities, then they're actually growing. That's what the Barclays strategy has been. Whereas if you're more specific in certain areas, then they've been losing some of that share.
Thanks. So now let's look at the bigger picture. How does the composition of investment banking activities impact the overall return of European banks?
Well, that is part of the dilemma the banks are facing, because what we're basically saying is if you want to grow the share and get the bigger in terms of the revenues, you need to offer all these different products to your clients. But to do that, you need to invest, expand, and grow in those markets. And if you look at Barclays, for example, they got 7% return on equity last year in their investment bank versus about 20% across their more usual retail or commercial bank. So as a strategy, therefore, like expand in investment banking, that has to come at expense of something else. So basically, you're saying, are we really saying they should be growing in a 7% ROE business and shrinking back in a 20%? And that doesn't really make sense. So that's why a number of these banks, they've been trying to actually shrink their investment banks and grow in terms of the retail side. And the flip side of that, of course, then, is if you're shrinking their investment bank, then you start losing that revenue share. And so that's a bit of a dichotomy they're facing.
Thank you, Phil. And as we continue to monitor these trends closely, you can find our latest research on the terminal by hitting BI Bank Go.